Welcome folks, in this video I want to walk you through my trade yesterday in the New York session, which was after the NFP news was released, and that's typically the right way to trade. If you are going to engage in price on a day where you have high impact news such as NFP, you want to let that news come out, let the volatility kind of subside so that the elevated risk is not as high. Okay, now I only trade NFP when I have a nice clean setup, okay, in alignment with my directional bias. So in VIP we were bullish all week. Okay, the only shorts we took were early in the week. So Monday we took a short which took out Friday's low. Tuesday we took a long. I think Wednesday was another short, Thursday long, and yesterday New York session also long. Okay, and I want to walk you through the long trade from yesterday. Now on Twitter I have already posted the execution video for this trade. Okay, so you can see it there. Okay, that shows you the live execution. Okay, now in this video I just want to walk you through the setup. Okay, we're going to go through a number of different time frames and walk through why I took that long. Firstly, directional bias. If I jump up to a daily time frame, we were at discount pricing. Okay, so discount pricing means we're at the low end of a fair value gap. Okay, so that's why I was looking for longs at that point in time. So here you can see we have a fair value gap. Okay, and anytime we're down the low end of that, then that is a discount PD array. Okay, you can see we've got on Friday, which is the last day there. Okay, you can see Friday's popping down into discount, which is why it was an ideal environment to look for longs. Okay, just because it's down there doesn't mean that we long automatically. We need to look at time, we need to look at the setup. We also have rejection block. Okay, so Friday low is also coming into a rejection block. Okay, so I'm watching all of that. Now that's why I'm directionally bullish, right? Because down there is discount pricing. Okay, so I'm going to jump down to a 1 hour time frame now. Okay, so I'm going to go through and walk through a couple of different time frames. Okay, I like the 1 minute. Okay, but then I will cycle through different time frames. So firstly, there's our previous low of the day. Okay, so that low there stops. That's 8:30. Okay, so we go down to the entire 8:30 candle and it stops right there. Now at that point there, we haven't taken out previous daily low. Okay, so with high probability, the market's going to kind of manipulate and make people believe the low's in, start trading up. But we should always expect that when you're that close to the previous daily low, the market's going to come back down into that previous daily low. And in most cases, that's going to happen in that next hour, right? So this here is 8:30. Okay, we start to move up a little bit, and I'm expecting that sometime in that new hour we're going to be down here. Now it happens prior to that new hour, and there's a reason for that. Okay, so the 8:50 macro runs. Okay, so there's a macro at the top end of every hour. Okay, that runs 10 minutes prior to the start of every hour and goes for 20 minutes. Okay, so 8:50 macro spools for liquidity, and we take out the previous daily low. Okay, that's kind of what gets me interested in the market. Okay, also at that point price is at a discount as I've explained. Okay, so and it's 9 a.m. right, or approaching 9 a.m. So that's kind of what I'm looking for. Okay, to get interested in this market. Okay, now after that, I am looking for a setup. So on the 1 minute chart, I see a couple of things. Okay, I see firstly, we have this 3-bar reversal pattern that I like. I've spoken about it many times. Okay, where you have, it's basically 3 bars. Okay, where you have a down candle and then the middle candle wicks. Okay, basically we're taking all this liquidity. And then you engulf that complete structure. One candle typically engulfs back up to the high of this down candle, but here we've got it, the next candle up, and that's okay. So long as that kind of a structure. Okay. And that's what I like. Now, we also have, at that point in time, a balanced price range between this single down candle and this single up candle, right? So through there is a balanced price range. All of that is indication of bullishness, okay? That is an ICT bullish signature. So I have taken along there, okay, that there is right at 8:58, okay? So if I show you the entry, let me go and look at the entry so you can see this is my journal posted in the VIP community. Haven't posted this on Twitter yet. You can see right there, the time, 8:59. Okay, so that's my first entry, 8:59. I bought a 5 lot. Okay, and you can see the price there, 2638. Now go and watch the execution video that's posted on Twitter already, where I actually do this live so you can see it. Okay, it's fun to watch. 2638. Okay, and that is just above the previous daily low, which is around 2637. Okay, now that's what I want to see, right? I want to see that we go through the previous daily low and reject, right? There's no guarantee that we go through the daily low and come back. So when we are going through the daily low, okay, we could continue going down. I'm looking for a rejection. I'm looking for the reversal, okay? When I see this, that's what I identify as a reversal, a rejection. Plus, other things are also there, as I mentioned, bullish on the day. We're at a PD discount array, the fair value gap, okay? We're also at a rejection block, a daily rejection block. So you've got to have context, right? And I'm looking for higher prices, okay? So you've got to have all those things in back in your mind when you're thinking about taking this position. Now, what else do we have? We also have IOFED, right? Here's a fair value gap. This candle drops in. Okay, we have IOFED, another IOFED right there. So I've taught you all of these things on my channel. Okay, so if we go back and look at my second entry, it's right at 4. That's 9 a.m. Okay, my second entry 9 a.m. where I've added it to my position, right? That there is 9 a.m. And I bought a 3 lot and at 2639, okay? And that's from that IOFED, right? That's the IOFED right here. The first one you can see is that as it's dropping down, I'm buying into there, okay? So that's a 9 a.m. entry, okay? So that's my complete position size. I don't add any more after that. Okay, so let's look at this on a 2-minute time frame. A little bit cleaner on a 2-minute time frame, so that's why I want to show it on a 2-minute time frame. So on a 2-minute time frame, let's jump to 9 a.m. Where's 9 a.m.? Here we go. So you can see it's a nice, clean, straight down, takes out the low of the day. Okay, and then we have a nice 3-bar pattern, right? We have a down candle, a wick in the middle. Okay, makes it bigger for you to see, and a complete engulfment. Okay, so it's a bit easier to see on a 2 minutes. So sometimes I'll traverse through different time frames, seeing what's going on. I've got multiple monitors anyway, so I can quite easily just click through different charts and look at what's going on. Just helps. Okay, so this is a very clean 3-bar pattern, and entry right when we engulf. So you can see my entry was at 8:59. Okay, and that's on a 1-minute chart as we're dropping back down. As this is formulating, right? 3-bar reversal pattern again after taking out previous daily low, coming to a daily rejection block and daily discount fair value gap, right? The low end of that fair value gap. Okay. Now I want to show you something that I've shown you many times. Okay, we can take this low, this what I call the manipulation leg, use that as a range projection up. Okay, you can see we get up into this area, okay, and then aligned with this buy side liquidity. Okay, now I've taken my entry a bit right there. Okay, I've taken it based on time, right? So you can see in my execution video, my take profit level is there, and I manually closed it once we got close to there because of time, right? I'm always watching the clock. That's very important. Okay, so let me talk about the exit. Okay, I'll go back to a 1-minute chart. I'll take this off now. The reason for my exit was obviously I had the target there, but then I'm also watching the clock. Okay, so if I now go to 9 a.m. Okay, so my exit, you'll see it on the execution video. I had a take profit right up here somewhere. 2657, I believe, was my exit take profit, just to back up and rebalance, right? I could have put it up here at the buy stops, but this is an easy target. I like to go for the easy targets, okay? So if we follow along the market, so we've got a low, we've got a high, okay, we've got a lower low, and as we move up, this zone is important, okay? So our breakers are up here. You can see that as we're popping down here, it's coming down into the breaker, okay, right there. And we continue to move up, okay? So we also have, now I'm watching the clock, and when I see the 950 macro, you can see the 950 macro is coming down, and it's left buy side liquidity. Okay, so once the 950 macro takes buy side, okay, that's pretty close to my take profit. Okay, 2654, I've exited my position because the new hour is about to commence, and we may have a pullback. So you can see, I don't show the time of the exit, but you can see exits at 2654. Okay, you can see the price there, 2654. So I'm walking you through this so you can understand my thinking process behind how I've entered my trade and how I've managed my trade. Okay, so here 950 macro spools to buy side. That's pretty close to my take profit level, which is up here, okay? And so I have taken that trade off because the new hour is about to commence, and I'm thinking we might get a bit of a pullback, okay, into this order block, okay? So let's look at this now on a higher time frame, okay? Let's see what does the 5-minute provide, okay? Let's go to, so 5-minute is pretty messy, okay? Let's take a look at the 3-minute, okay? So let's go to 9 a.m. Get to the right day. Here we go. Okay, that's pretty clean. Right, nice and clean. You can see 3 down candles, which I love. Love to see 3 down candles. They take out liquidity. Okay, this is a key piece of liquidity. Okay, previous daily low. And coming down into the daily low end of that fair value gap, as well as the rejection block on the daily chart that I've shown you. Okay, here now we are into the 10 a.m. candle. Okay, so this is now the second 15-minute candle of the 10 a.m. new hour, right? New hour. As I said, I like to trade a new hour at the start of a new hour or 30 minutes within that new hour. This is that second 15-minute candle popping down into this bullish order block that's taken all this liquidity. Okay, so nice, clean setup. You can then target these buy stops or these buy stops. Okay, I'm already out of this trade as the 950 macro has taken all this buy side, and this is very close to my TP as I've shown you. Okay, now what do you see here? What do you see here? I've shown you this, right? This is a market maker sell model. You have your consolidation, okay? You have your accumulation, reaccumulation, right? Smart money reversal back down to the low of the original consolidation. Okay, so obviously I didn't trade this. Okay, I've exited there and I've closed out. Okay, but how could we have traded this market maker sell model? I'm going to drop down into first a 1 minute. Okay, let me show you this on a 1 minute. On a 1 minute, let's find 9 a.m. Okay, as I said, I didn't trade the short from that market maker sell model, but it's good for you to know and practice and see how you could have engaged with price at that point. Okay, so let's just find, there we go. Okay, so let me bring this down, we'll make it a bit bigger so it's easy to see. Okay, so it's pretty clean to identify this because you can see you have your original consolidation. Okay, this on a 1 minute now. You have your accumulation, reaccumulation, and then your smart money reversal, and your target's going to be at these lows, right? The original consolidation below that, or at the midpoint of that, either valid. Okay, you can do the midpoint at the target or below at the target. Now, let's have a look at this smart money reversal. Quite easy here on the 1 minute. Okay, so I'll just make this bigger. So at this point, you're looking for a smart money reversal, okay? And you can see this is at the start of a new 15-minute candle, right? Entries, exits, you've got to be watching 15 minutes, right? The new 15-minute candle is often the level where you can expect a change in delivery, right? At a new 15-minute candle. Okay, obviously everything was in context as well. So this is a new hour. This is now the end of the New York session, and it's the first 15 minutes of that new hour. Okay, so what do we have here? We have two down candles. That's a swing low. This is a high. Okay, this moves above this high. Okay, so that swing creates a new high. Those two down candles are therefore our bearish breaker. These two up candles are our bearish order block. Once we go through there, that validates that as a bearish signature with context. Not every time, right? We're looking at a market maker sell model. We can see consolidation, accumulation, reaccumulation. We're looking for smart money reversal. We're watching time. Okay, this is our brand new hour. Okay, and within the first 30 minutes, we have a reversal. Okay, once we get down through the bearish order block, this little move up into the bearish breaker is entry for short. What's the low here? The low here is 2665.89. The high 2664. So 2666. Okay, so good old ICT has taught us this and has proven to us how these algorithms deliver perfectly. Right, the low there 2665.89 and the high 2660.02. How perfect's that? Okay, and then target, as I said, is going to be back down through the original consolidation. As I said, I didn't trade this, but I always like to go back and look at what other opportunities were available. This is very clean, and very far away from the original news announcement at 8:30. Right, so nothing wrong with taking that setup down. Right, that's probably better than the long, in my opinion, that I took. This is very nice, very clean, very easy. Okay, now last bit, I'll just touch on the 15-minute. Okay, that was also pretty clean. Okay, 15-minute. So here we have, just make this a bit wider. Okay, very clean. We've got, what do you see there? After taking out the low of the previous day, coming into the daily fair value gap discount, and coming into the daily rejection block. Okay, we have on a 15-minute chart, 3-bar reversal, right? You got your down candle, the middle candle that wicks and takes out all the liquidity, and then engulfment. Okay, bit messy there, so sorry about that. But I think you can see that 3-bar reversal. Okay, I'll just draw the right there. Okay, the engulfment in this case is just the engulfment of the middle candle, and that's fine. Okay, because this is quite a large down candle, so you don't want to wait to enter at the engulfment of that entire candle. That's why lower time frame the better. But you can wait for the engulfment of this candle. Let me just clean that up. Okay, so you can wait for the engulfment like this. That's engulfed with this middle candle. Okay, now you don't have to enter that. You can wait for confirmation. Okay, confirmation is basically that is there. That middle candle is basically an order block. Okay, because it's taken liquidity. So this has taken all the liquidity. And once price trades above the open, that triggers the buy program. I like to see a close above the high. That's just a personal choice. Okay, you're then waiting for any pullback, right? So this move down is coming into the bullish order block. Okay, and then you're looking at time. What time is that occurring? That is occurring at 15 minutes within the new hour. Okay, and then you can target these buy stops. Okay, and then this then triggers our market maker sell model. Right, you can see it here nicely. Okay, so let me just very quickly touch on the daily. Okay, so when I'm referring to the discount, I'm referring to when price is there, okay, at the low end of this fair value gap. Okay, this here is a rejection block. Okay, where you just need to look for the market to trade down into this. Let me clean this up. Right, the market just has to trade down into this wick, right, which is done there, and basically you have two bodies and then a wick. Okay, so that's a rejection block. You can go and look for some ICT videos on rejection block. Okay, so the entire premise of the trade is that on the day we are bullish. Okay, VIP knows that I was bullish throughout the latter part of the week. Okay, and therefore we're looking for discount pricing. Okay, but that's not the only thing. Okay, we need to look at time, as I've explained. Okay, time's important, and obviously the setup, right? So all those things are important. Okay, so in terms of time, I want to trade in the new hour. Okay, that's my preference. That's when I like to trade, in the new hour. Okay, in terms of setup, we want to see what kind of setup do we have, and I've walked through a few. We have different setups. We have our 3-bar reversal after taking out low of the previous day, coming into a low discount fair value gap area, a daily rejection block. Okay, and then just looking for ICT bullish signatures to get in, right? If everything else is in alignment with our prognosis, okay? My favorite is the 1-minute chart. That's what I like to trade on for entries, okay? I'm not looking at the 1-minute chart. I'm watching for hourly, daily, and 15-minute and 5-minute. When I see what I need to see, I drop down into a 1-minute, okay? So when I see that the previous daily low has been hit, when I see that the price has come down into a daily fair value gap discount, when I see that the price has come down into a daily rejection block, I then look at time. Are we at a new hour? Yes, then I drop into a 1-minute chart and look for, what do I see? Okay, I see lots of things that I've walked you through. I'll see balance price range here, IOFED. These down candles become our bullish order block. Okay, we have breakers up here that we're popping down into. Okay, so lots of different things that afford me opportunity to take along that, and along because it's in alignment with my directional bias. Okay, so I hope the video is useful. I invite you to go and look at on Twitter the execution video just for fun. Okay, and I will post this chart on Twitter as well so that you can see the different entry opportunities. Okay, and then I will also post for you another chart which is 15-minute chart. Okay, that also talk about some of the things that we can see on a 15-minute chart. Okay, hope the video is useful. I will now talk with you in a future video.